All right, happy Saturday morning to you. It's 10 after 9 on February 9th, and it's a Saturday morning. We're going to take a look back at yesterday afternoon's the figurative trade I put in here, which is represented by the blue line. If you haven't seen that video, go ahead and watch it. You can watch the whole thing play out, the idea behind it. But I just want to talk about, I want to put some other perspective on it as well. We were concerned that value was overlapping to lower and that the VPOC was and still is way down here at 85.75. This trade was made in the L period, just as L period opened up and came down. We were looking for it to continue higher, understanding that's possible we're going to get filled. We need to come down a tick or two or three, and with the very much the potential of closing the single prints in J to the initial balance, and the likelihood that we would come through the initial balance high, the early morning high, the A high here at 97 by a tick or two or possibly a little more. Well, it's exactly what happened. Okay, it came through 2 ticks. It was a little uncomfortable. Of course, nobody likes to take any heat, but it was also because we had a double distribution up. It looked like undercover short covering here, stealth short covering, that we might even get a just a 1 tick below K and a continuation higher. We wanted to be in on the trade. If somebody was so inclined. Now I did this again figuratively as a 1 lot. Again, this wasn't live. This wasn't. I mean, it was live when I did this, but I'd already done my trading for the day. This was not done in a sim account or anything. This was just I was talking it through, and we did trade through it. So there was no like artificial fill here for you ridiculous attackers. Anyway, so the point is that one could have certainly made up for this, recognizing that they were not getting any downside and on the way back up, or even anticipating it might close this to average in right around here. Okay, nothing wrong with that. Okay, is that a new concept to you? Look it up. So at any rate, the odds, there was the potential that we fell back in, and I talked about this, and possibly close back here in the middle somewhere. But there was also the fact it was Friday. I talked about this, that we might get some short covering, particularly this was an open drive in O, that we might get some short covering into the the rest of the afternoon and M period. I think I specifically said M period, and we certainly did. And there was also, of course, the potential we could get a long liquidation break from all this moving up and another move down. So, again, as I say, it goes without saying, anything can happen. You just got to watch what's happening. But what I wanted to look at here was a couple things. So one is we're going to throw a fib on from the early morning high to the low, okay? And I'm going to, I don't think I have a preset for this, but let me just clean this up here just momentarily, okay? I guess I'll make a preset. I just want to clean this up, make it a little easier on the brain. Okay. Now, K high came to 127, 2%. The M high came to 1618 and a little throwover. Okay. Exactness kills. That's a 1618 move. Extension. It's called an extension. Okay. So let me do this. I move it to this high. Wait a minute. I'd be a little lost here because I did something earlier and it made let me think here. Okay, well, we'll just leave it at that. From the early morning high, I did something earlier before I decided, I need to make a video on this. As you can see here, we didn't quite get to the 168 from this high. Just a moment. Excuse me, this swing high. All right, we'll just leave it right here. So, it's like I had one that was exact, and I can't remember where that was from. All right. Well, it's not that important. The point is that this is useful again for looking for targets. So now you've got a 1618 right here, and you're long in the M period, let's say, and you've got first of all this selling area where sellers might step in right here from 7/4 up to 8 3/4, and you've got the edge of this that you're traversing. You got acceptance inside this balance area from 0.2 to 7/4, and you see a 1618 right here. Well, you want to consider not necessarily becoming a seller here, because look, we are one time framing higher again. Well, we had this correction. I don't like that word, but we had this adjustment, and it stopped one time framing. But the dynamic is still, the trend, the immediate trend is up. Immediate, very near term trend is up, and you want to get out. Take it off. Otherwise, you might be in reload or call it a day. Now let's look at what this was. So I'm going to throw the risk reward tool on here. I'm not saying where I would put a stop or where one would put a stop, but let's just let's play it conservative as far as let's know we anticipated him coming back into the range a little bit, the initial balance a little bit. So let's just have our stop down here in this area, which is now kind of a buy zone, and we got in right here. Okay, so that's what the little white dot is. So I'm going to, for a moment, and we took 2 points on this yesterday. It went further, but we called it 2 points when it got up here. So let's move this up, and you get out. Let's say, again, not on the edge, not on the N high, because I would not buy it, not on the M high. Let's just say even like right. Let's say you saw it and you're like still getting greedy now because you're making some nice profits on this, and you just in denial, and you think it's going to go to the moon and come all the way up to this high on this, come up to the initial balance high on the 7th or something like that. You get in these mental states of delusion, okay, but let's say that you realize, oh, I should have gotten out, and it's come back, and you just get out in the middle here, not in the middle of the gray area, but sort of the upper part of the gray area. You get out, and let's see what that would have been even. That's 32 ticks, 8 points, $400, right, on one lot. That was from this trade where you took 60 ticks of heat. Doesn't look so bad now, does it? Okay, I made the comments about this 2-to-1 thought-stopping nonsense that motorheads just regurgitate. That's all they're doing, regurgitating. That's what they heard. Must have a 2-to-1 reward ratio. Well, no, not if you're really good, and not if you have other plans. There's lots of ways to trade. Maybe you want to go for 3 ticks. So what are you going to use? A 1-tick ratio? One tick for 3 ticks? See what I mean? It's ridiculous. You can get shaken out in a blink of an eye on a lot more than that, but when you're that tight, that's crazy. But sometimes it pays to take 3 ticks. It's $37.50 per lot. You do that a few times a day. That's a little bit of money. So look, let's say the stop was down here. The risk was 13 ticks. Let's just make it an even 3. Okay. Even 3 right inside this right under this little low volume node, right where it gets to be 4 wide, let's say. Now let's just say, could have, I would advise not putting your stops on there in a way that your broker will see them. You figure it out, okay? Because who knows, they're sitting at a trading desk and somebody's getting a nice kickback for texting to their big player friend where the majority of the retail traders seem to be putting their stops. I don't know. I've never worked on a desk like that, but it's conceivable to me. And I was very dismayed to find out when a broker knew exactly where my stop was on a trade one time when I had to call the desk. And I did not appreciate that. There's always questions. Oh, they know where your stops are. Well, and then a lot of instructors will say, oh, they don't know where your stops are. Nobody knows where to stop. No, they do. They're human beings and they're corruptible. and they have cell phones, and they can text, and they can have buddies, and who knows? I don't know. All I know is best practice, don't tip your hand, right? Don't be one of the average Joes who is just going to get wiped out. That's what this move down right here was. How many retail traders maybe decided to go long and got wiped out on 6-tick stop, an arbitrary six tick stop, or arbitrary? I'm gonna be protected just inside the early morning high. Well, they came and got you, right? They came and got you, took your money, and then continued to make more money, right? You would do it too. I don't know that you would. I'm not saying you would. It's got to be illegal. It's definitely unethical and immoral. But if you know, I'm not saying that you would or I would find a buddy and give them a percentage to give me clues clandestinely through a text message or IM or something like that while they're working inside a firm sitting on the trade desk. I don't know. All I know is that there are definitely, if it's possible, there are definitely people who have no scruples and who would do that in the pursuit of their God money, okay, in the worship of their God money and self. So you've got to be as wise as a serpent, you see, and that's something to figure out. There are different ways to do that. That's not the scope of this video, but I thought I would express that because this is a typical situation where it's very clear that what was this move down? Was it just I'm taking profits and it just happened to come in here? No. How many people, even smarter traders, are going to go ahead and try it and use an arbitrary 6-tick stop? Many traders use an arbitrary stop. They use an arbitrary amount. I don't want to risk more than 1 point, 2 points, 3 ticks, 6 ticks. There's nothing wrong with that. It just is inefficient in the fact that you may find yourself again and again the victim of the stop bullies. There you go. I coined a new term. The stop bullies who want to come and run you out and get the liquidity, get the liquidity, and then resume the move that you had right all along. Okay. Well, am I saying you want to be 4 or 5 points away? No, I'm not saying that at all. How about this? You're watching what you're doing. You maybe do have a stop and you're quick. And when you don't like it, you exit. And there are many times there'll be a stop run and you're going to get where your stop would have been. You'll get a bounce back. Okay. You're going to get a bounce back, even if it comes down again. And and again, this takes some amazing, well, amazing is the word for it, but it takes a phenomenal cold steel self-will and decisiveness to recognize, okay, I'm likely to get stopped out. I got a chance to get out. Now I'm going to flatten. Now, how many times do I do that? Look, I'm as human as anybody else, and I don't do it as much as I should. I'm always hoping it's going to keep going, but that's the way to do it. That's the thing to strive for, is to be like, there'll be another trade, boom, get out. I don't want to lose. I got a chance to lose half as much as I was going to, because they're going to come down and make another push down. But again, you've got to know your tools. You got to know your instruments. You got to be familiar with your market and knowing how that plays out. Another way to do it is to use another way to help yourself is to not to use a type of a dome or whatever that will not, that sets a limit. Like, it may hit your price where your stop is. Typically, here you go. Here's a key to the kingdom. You can have this for free. All right. But almost for free. What I'd like you to do is like the video and subscribe to the channel. Will you do that for me? Would you just be that generous? Okay. So here's what you do. You figure out if you need a different piece of software or whatnot, is that you set your dome to not, like, the price may come to where your stop is, okay, or where you have a stop, but the stop does not trigger until that order book gets down to X number of contracts. Oh, did you ever think of that? Well, it's a possibility. Look into it. Okay, there you go. You have that for free, almost. All I'm asking, like the video. Um, and I think pretty soon, I'm not getting really much. I'm going to take all my videos down. So I don't know. It's kind of getting, who likes talking to a mirror, or talking to a wall, or talking to an answering machine? It's kind of, kind of dumb. I do have one person who likes and comments on a fairly regular basis, and frankly, that's been enough to keep me going. But just I find myself more and more just sharing things to people. I have no idea who they are, how they're going to use it to make money, and what they're going to do with that money, whether they're good people or they're bad people. And I don't really like that. I don't need to help anybody out there. This cost me a lot of my life, time, energy, money, frustration, anxiety, you name it. The journey to learn all these things, become a trader, has been not easy. And to make it easy for other people, on one hand, it's my nature. On the other hand, mm, ain't nobody got time for that. Not the kind of people who are out there, not the kind of people I've experienced. Just like I've said in the last couple of videos, I give you a cup of cold water. I push you out of the way. The bus was coming. I'd change your tire. I'd uh, pick you up hitchhiking, possibly. Used to do that. I don't necessarily do that anymore. But my point is that I'm not going to make any filtering on helping people in those kind of contexts. But when it comes to this kind of a thing, this is serious stuff where there's serious potential to to gain a lot of money and power by being an excellent trader. And I don't think everybody I want to see them be an excellent trader. I'd rather take their money. How about that? Okay. All right. Well, have a good morning, or excuse me, have a good morning, and good weekend. I think there's something else I wanted to say about it. I did talk. I remember talking about this open drive down being a potential thing. I talked about that. Seems like there was one more thing I wanted to mention. No, that's it. We'll leave it go at that, and make a great weekend.